Today, one of my portfolio companies, GitLab, just reported earnings. You can see the stock is up 15% after they reported. That's incredible. But year to date, stock is still down, somewhere around 40% or so. Let's jump into their earnings and I'll talk about why I love this report. All right, so it's been rare to see a software or a tech company report earnings and not drop 15 or 20%. So this is a pretty nice jump here. And here's what happened. They reported non-GAAP earnings per share of minus 10 cents, which beat by 5 cents. And then revenue of $112.98 million, which beat by $6.9 million. So that's somewhere a beat of 5-6% or something like that. Customers with more than $5,000 of annual recurring revenue increased to 6,469 customers, up almost 60% year to date. Customers with more than $100,000 in ARR increased to 638, which was up almost 50% year to date. Non-GAAP operating margin of negative 19%. And then their outlook is better than what was expected for Q4 and for FY23, which is a lot of the reason the stock is reacting the way it is after hours. They posted revenue expectations of 119 to 120 million, non-GAAP operating loss of 27 cents to 26 cents, and then non-GAAP net loss per share of negative 15 cents to negative 14 cents. And then for 2023, revenue of 420 million and a net loss per share of 56 cents to 55 cents. And so you could see for the year, analysts were expecting a net loss per share of 65 cents. So they're coming in 10 cents better than that, at least for their expectations. And then the revenue estimate of 413 million. And they're coming in at 420 to 421 million. And so if we take a look for fiscal year 23, 24, and 25, they're expected 413 million, then 586, and then 834. These are from analyst expectations. Again, these are just expectations. These numbers will surely be wrong. But $834 million in fiscal year 25 puts us down to a price to sales ratio of under 8 with a ton of growth potential ahead for this company. Here's the news release from the company's investor relations website. I'll just cover a few comments here. But you got revenue growth of 69% year over year. Just fantastic revenue growth to 113 million. So it's not like they're just, a couple $1 million here. From their CEO, companies cannot afford to slow down their software innovation. Today's turbulent economic climate, they are turning to solutions like GitLab to reduce costs, drive efficiencies, fuel a fast pace of innovation, and meet customer demands. Q3 business results demonstrate GitLab's value proposition as a mission-critical dev security ops tool or platform for software innovation is resonating. Third quarter results continue to demonstrate our ability to drive high growth with improving margins. Revenue of 113 million grew 69%. Non-GAAP operating margin improved by approximately 1,700 basis points year over year, and dollar-based net retention rate again exceeded our reporting threshold of 130%. That means that customers spend 130% more 1 year after the next. So if they were a customer this year, then next year they're spending 30% more than they spent this year. That is basically like growth with no marketing costs. When we talk about software companies, dollar-based net retention rate is something that we want to look for. We want it to be above 120%. 130% is excellent. And so I will continue to hold GitLab. I think this was a fantastic quarter, and I think there's a lot of growth left ahead for this company.